Good afternoon from the Shreveport office of Eagle Financial Management Services for the May 7th, 2021 edition of the Jack and Bill Show. Well, Bill, the April employment numbers came out this morning. You would think from the action in the stock market that they were bad. It was estimated that we were going to have 1 million new jobs and that the unemployment rate would fall to 5.8%. We actually created 266,000 new jobs, way lower than 1 million, and the unemployment rate rose to 6.1%.
Mm-hmm.
So, and with that, the market rallied. So go figure. This is it's a little bit of a worrisome sign to me that market PE ratios are have skyrocketed, not necessarily justifying the fundamentals, although we are anticipating very strong economic growth for the rest of the year, and I believe that. So the Nasdaq and Russell were up. Russell up 1.3% today. The Nasdaq up about 1%. The S&P 500 and the Dow up roughly 0.75%. That's bringing the Dow Jones, Bill, on a year-to-date basis, we're up about 13.25%. So the markets had a very strong week this week, partly because the bond market has really settled down, although it was off today. The yellow metal gold escalating again here, along with some of these cryptos that have shot up into the stratosphere. You know, it's an alternative currency. Gold closing at 1832, up $17 an ounce. Call it just about a 1% move. Silver 27.56, up 8 cents an ounce. West Texas Intermediate up fractionally to 64.73. There were some oil names today that went up much more than the commodity, though, because one that we have exposure to, Energy Transfer, reporting a $2.4 billion windfall with their earnings release from Ice and Snow Mageddon, when these natural gas prices skyrocketed. Other safe havens, a 2-year Treasury note, it's been strong, 0.159%. The 10-year falling to 1.56%, and the 30-year having fallen to 2.28% today. It was up about on the week, it was up about 4 basis points today. But the high quality bond market is off about 1.5 percentage points, 1.25 to 1.5%, year to date. We've really avoided that space, don't really, have exposure to that. But
it goes back to inflation.
Exactly.
And, when you're talking about what we're seeing with commodity price inflation, but earlier you were talking about unemployment. And yes, the unemployment rate is still high. But you just look around. There's jobs wanted ads everywhere, and employers are not able to recruit employees. I thought it was interesting today in the Wall Street Journal, there was an article about this combination of commodity price inflation, supply constraints, higher freight costs, and labor shortages are leading to empty shelf space in stores. So you walk into the big box retailers and you do see a lot of empty shelf space. And some of these big retailers like Walmart, for example, are starting to levy fines on suppliers for missing shipment dates. So all of this is leading to greater and greater inflation.
Chicken wing prices going way up.
Chicken wing price. Oh, and that reminds me, happy Siete de Mayo.
Okay, cool. Yes, 2/3 of all inflation, I believe, Bill, comes from unit labor cost increases. And if people won't go back to work, along with our aging, the United States aging demographics following kind of Asia, we could be in store for some serious inflation in the future when you add in the commodity price inflation. But last week we talked about compounding and compound interest. And I had a real live example yesterday. I was doing a client review with a large client, and he has a gentleman that works for him. And you could go ahead and show the graphic now, Wesley, if you're with us there. But this gentleman is 21 years old. He actually opened an account with us today. And so I was explaining to him yesterday, he's saved up some money. He was actually gifted $1,000 to start. And so if we can, the U.S. large cap stock market has compounded at about 10% per year. As you can see on the graphic, call that 10%, not taking into account inflation. From 1926 to the present, according to Roger Ibbotson and Associates, it's about 10% a year. Small companies, about 12% a year, which would make these numbers way better. So he was gifted $1,000. And if we make 10%, look to the right of the screen there, the initial investment grows to $45,000. Then he's going to save electronically $150 per month. It's going to, through Schwab's MoneyLink system, it's going to come from bank checking into a Schwab account. We compound that at 10%. That grows to $948,611. When you add that to the compounded 1,000 that turned into 45,000, you get 993,870. Call it $1 million. One more month would make it over $1 million. And then look at where you go from there. Albert Einstein said, compound interest is the greatest wonder of the world. So this guy's 21. In 40 years, at age 61, he's got $1 million. At age 62, it goes up over $100,000. So just wanted to illustrate that since we were talking about that last week.
No, it's a great illustration. I think the challenge for people, especially young people, is they don't think that far into the future, and they're more concerned about today, and enjoying life in today. They're also thinking about what kind of near-term expenses they have. But if someone could be really disciplined about this, that's not a large sum of money. $150 per month. For some, that could take a lot of belt tightening, but for others, not so much. But it really does make a big difference over the long run.
Absolutely. Well, one of the things when I picked up the paper this morning, COVID in the news every day, global virus deaths set to top 2020. So, Bill, we had 1.8 million deaths last year, and we're already at 1.4 million worldwide. That is, we've had 157 million reported cases worldwide, with the world population at 7.7 billion. That's about 2% of the world population. Now, with almost 3.3 million deaths, I think that number is going up about 13,000 a day. India and Brazil are going up sharply right now. So in the United States, it's a little bit different picture from the world. We've had 33.4 million cases, ourselves included. That's about 10% of the U.S. population. I think that the world numbers are likely way underreported. But we've had about a third of America vaccinated now, 2 times. If they've taken the Moderna or Pfizer shots. So we've had 594,000 deaths in America. That's about 0.2% of the population of the United States. But here in the United States, we're looking at, I was just pondering some of the implications of all this and what the markets are discounting around the globe, Bill. The daily cases and daily deaths in the United States are in a dramatic decline. And I anticipate, I'm not a doctor, this is just looking at the numbers, once a week or twice a week that I do. I think the United States is going to be at herd immunity very soon. in my opinion, likely maybe around the July the 4th timeframe. But when you look overseas, India and Brazil, it looks like are going to overtake the United States in reported deaths.
I mean, in countries like India and Brazil, you cannot practice social distancing. It's impossible. We could have said the same thing about China, but in China, they got involved in this early and basically locked down an entire region. So, in the absence of that kind of government interference in these highly populous countries, it's just a sad state.
Yeah, and we've seen some very controversial news come out this week for big pharma, for Pfizer, namely Pfizer and the BioNTech merger, and then Moderna. Generally, when you go through the human clinicals process and spend all that money, you get patent protection, I think, for typically like 10 years. I don't know what the exact number is, but it looks like our administration wants to, wants to take away the patent protection. So it's very controversial because we could have generics coming forth that could go unchallenged if they bring them out tomorrow. But it could also potentially bring forth all kinds of problems. Like
Sure.
we could be helping we could really be helping China, because they would be the first ones likely to come out with generics, and you'd likely see all kinds of generics that really, if you think of taking this vaccination coming out in pill form, and it doesn't even do it, or getting a shot with water in it or something like that.
What happens, with the next pandemic?
Yeah.
If they were to do this, it would be a disincentive for the private sector to, put the time and the investment capital into development of new vaccines.
Yeah. So, and think about this. I mean, that could be very harmful. It is when you think India and Brazil, I think, these are emerging markets, or these are poor nations. And it's shameful for unethical behavior in this regard, if it does occur, and it's sad that these countries are really struggling with this right now.
Yeah.
And there's investment implications there too. I mean, when you look at the new cases and new deaths reported overseas, it doesn't look like there's a lot of progress there. So this is something that we need to watch closely, in terms of our asset allocation and how we want to allocate. We do have international exposure, little emerging market exposure, really. We do have some there, though. And generally, frontier countries and emerging market countries are generally faster growing, although historically, those returns can be hampered by historically the stronger currencies like the dollar and the euro and the yen. So
But if you're just looking at valuations, overseas is a better value than the domestic stock market, generally speaking.
Yeah, generally speaking, the PE ratios are much lower right now, but they're going to have to overcome COVID and deliver on the earnings. So, Bill, that brought me up to another thing that's very fascinating and interesting to me. Oh, here we go. Chicken shortage raises costs for restaurants. That's not what I was going to mention to you. But pictured here, we have a gentleman named David Swensen, endowment chief at Yale, altered funding in academia. Now, what do we know about David Swensen? I find this to be really fascinating. I was actually looking at the Yale endowment portfolio, which I think of all the big endowments, University of Texas, Harvard, Yale, Princeton, who else is up there? Stanford. I think those are like the big five. I was curious about what his portfolio looked like. I was looking at it a week ago. And what's really fascinating about this, Bill, is he de-emphasized the ownership of conventional stocks and bonds. And he authored 2 books that I've very carefully read, cover to cover. I'd like to honor this gentleman. Sure. Pioneering Portfolio Management is a must read, and Unconventional Success, a fundamental approach to personal investment. And so he was
go ahead. This one really is the classic.
Yeah.
This one's the classic. The other book is also good as well. Jack's copy was water damaged, had mold, so we made him get rid of it.
Yes, somehow water got spilled on it while I was watering my plants, Bill.
Imagine.
And they found it and threw it away about 2 weeks ago. Wow.
Yeah, we have a black mold policy in this office.
Wesley, I don't know if you could show this slide here. We can kind of articulate the contribution that David Swensen, we've on a prior episode, Bill, we talked about the Markowitz Sharpe Efficient Frontier, and it shows returns on this axis and risk on this axis. And when you actually start with a conservative asset class, the return numbers here are skewed high. But let's just say that you start with 100% bonds and you add stocks, you actually reduce risk because the covariances or the correlation coefficients go negative. I don't want to go way over anybody's head. But when you don't want all your investments moving in the same direction at the same time, do you, Bill?
No.
So what Swensen learned was that he could add unusual investments, even illiquid investments, and bring this frontier up here, which means much higher returns, and without really increasing the risk. And he studied under the Markowitz Sharpe stuff and then James Tobin, who made a huge contribution to this.
Well, I want to point this out.
Yeah.
That what he did was he took over this endowment that was very plain vanilla.
Yeah.
I mean, it was traditional stocks and bonds. And he was able to generate these higher returns by using less liquid investments. And so that's what so revolutionized the endowment portfolio management industry is he kind of led the way in demonstrating how if you take longer term investments like timber, right?
Yeah.
Timber is not liquid.
Yeah.
Right. These trees have to grow. And also using hedge funds and getting into private equity, especially venture capital. There is this liquidity premium that you can capture. So there's a trade-off. And in our business, working with individuals, we do place a premium on liquidity because we understand that our clients, need access to funds at any time. But, to the degree that an investor can lock up investments in hard assets or longer duration assets, there is an expectation that you can capture higher returns. And he showed us how to do it.
Yeah, by owning strange things even too,
Yeah.
Hedge funds. And anyway, David Swensen, Yale endowment chief, passed away late Wednesday evening, 67 years old.
Too young.
He grew the endowment from $1 billion at Yale in 1985 to $31.2 billion in 2020.
Yeah.
Now, they were taking 4 or 5% of the portfolio, kicking that off to fund Yale, paid for the salaries for the professors. They in 1985, when he took over the helm at Yale running the endowment, Bill, the endowment provided 10% of their operating budget. And right now it's more than 1/3 of that. So, wow. I mean, I think that's amazing. He also had
Yale is well endowed.
I think he hired like 2 out of 3 of the staff there are females, over males, and in an industry that's male dominated. He transformed the business of endowment management, took diversification to new levels through very unconventional applications, as you noted, bill of this efficient frontier that we talked about, de-emphasizing stocks and bonds and owning other things that most people didn't want or like.
Mhm.
So, but this is amazing. He averaged 13.1% per year over his tenure. That's 4.3 percentage points more than what you would have received owning a 60-40 portfolio,
Mm.
which is the way most endowments,
Right.
are allocated. And in 1988, he had a return of minus 0.8%, and they contemplated firing him because the Harvard endowment fund went up 5.7%. And then it's a good thing they didn't, because he really turned that around.
He did.
When they got whacked with the subprime crisis, it took 5 years for them to go back to making, new highs. And he had to tell the investment world that it's okay. We might be in illiquid things. We might be in some things that are aggressive, but this will come back, if you're patient. And those same lessons can be applied. That's what we like about this gentleman is we apply a lot of the principles through the efficient frontier and diversification economic theory, and we're in the flow with all of this stuff, right now. And so we just wanted to honor David F. Swenson, chief man at the helm at the Yale Endowment. And what else?
It's been a somber show.
Somber.
A lot of death.
Yeah.
We'll cheer it up next week.
There's I'm sure he's prepared some young bucks to take the helm and keep that ship sailing right along. Yeah. Well, what else? What else, William? What would you add to that?
No, I think that was a terrific honorarium of David Swenson. And if anyone is interested in discussing with us how we could apply some of these concepts to an individual portfolio, we'd be glad to discuss that with you. Give us a call.
Yeah, that's terrific. Well, it's a beautiful day here this Friday afternoon in Shreveport. I think the highs today are supposed to be about 82. Yeah, so next week, I'll throw some sports out to you. The LSU Tigers are ranked number 1 in men's track and field and women's track and field. And I have a personal connection to one of their athletes who's a multiple-time All-American. The SEC track meet is going to be underway beginning Thursday evening at Texas A&M University, College Station. And I will work Thursday and then leave early and head that way. So, Bill, you're going to have to handle the show.
We may do a Wesley and Bill show.
That's okay. I authorize and support that.
We would do it anyways.
Well, thank you, Wesley. Well, I think that's about it. We will. So I wish you well next Friday. Yeah. It's time to enjoy the weekend, enjoy the sunshine, make good decisions, and we will see you next week.